Hello YouTube, welcome to another video with the Mango method. Today we're going to spend some time looking at 13-week cash flow model. It's a combination of a 13-week cash flow model and a daily equivalent. The model is actually part of a three-way model as we combine it so that you can have the benefit of looking longer term, so within your three-way model, as well as for that short-term cash flow crunch management or cash flow management. So yeah, today's just a bit of an overview. We're just going to look through some of the key functions, some of the key inputs, the outputs, and then we'll have another session where we go through in a bit of detail on how we might fill this out in the fastest way and the most concise way, but still get accurate information as possible. So let's dive in. So you'll see this is in our standard format with sort of a core template in the background. So yeah, it's actually part of the core financial model. So if you've got a core financial model, we can look to get you the 13-week cash flow as well. Ideally with 13-week cash flows, the concept is you're looking at doing these to cover a quarter cycle being the most relevant cycle to capture a few things. One, what's your accounts receivable profile? What does that look like? What's your payables profiles? How are you managing that? It's just shy of the period that you need for capturing compliance payments, so statutory payments, again in Australia. In Australia, if you're on a quarterly cycle with a BAS agent, you're looking probably quarter plus a period or 2 months. In that case, like you might be doing it at the quarter end, so you actually capture those statutory periods because those tend to be the real stickler periods and the real painful periods that cause a lot of distress. We do have videos and do have blog content talking about how February and August, May as well, can tend to be really painful for small businesses. February is particularly bad. So yeah, check out articles about that. But yeah, they are a bit of a cash crunch. So having this tool really can help give you a bit of confidence in, one, the confidence to know what the plan is, but two, also some action plans on what needs to be addressed, like what actions to be taken from this. So it's not a tool that you necessarily want to be using day to day. Ideally, you're not in this stressful situation every day, but it is a tool that you want to be able to pick up and use at a time where cash flow is tight and you need to get a bit tactical about chasing your debtors, people that are overdue, or looking at people that, or having conversations with debtors potentially to just receive cash in advance and seeing what that will do to your cash flows. So it's an amazingly powerful tool. We often use it in conjunction with a three-way model, especially in turnaround modeling, which we do a bit of. So let's dive into it. So if we look at this model, we just give ourselves a start date. In this particular situation, the start date lands with a week ending Saturday. Now you can play around with this to get to sort of an equivalent week so that you can end the week on a Sunday, if that makes sense to you. It doesn't really matter because the daily reconciliation will work through that. But yeah, the key thing is if you have a date that has a reconciled cash balance in whatever accounting package you're using, that's the key, because you want the right starting cash balance. You want where all items are reconciled, and anything moving forward from that, if you have an accounts receivables that you can pull, ideally by detail. You can go by client and do an aging as well, but it does tend to provide, there are workarounds and there are ways to manage aging based clients. So clients grouped and summarized, and this is something we can look at in a separate video in detail. But yeah, looking at a detail level set of invoices and bills gives you the maximum control, because you can go to an invoice level and actually make decisions per invoice. So if we start at the top, we'll see that the layout of our financials is based on a broad set of general categories, so cash receipts from customers, vendors, so forth. That's completely customizable and changeable. What we also have is the detailed breakout. So the way we often approach this is addressing receivables. So you'll see at the top, we've got receivables, revenue cash, so revenue forecasted on a cash basis, accounts payables direct, accounts payables overheads. You don't have to separate these, but we do like to, because sometimes There's more attention paid to direct accounts payables. So then there's the cost of sales, salaries paid net, any pay-as-you-go withholding. So that's the tax withholding on behalf of employees. Super, payroll. So all of this stuff is customizable. Whatever is in this list is available for mapping. And again, mapping is crucial in our models, is available for mapping for selection. So wherever you map the line item, they will be taken up in the respective category. One thing to be careful of, so you'll see in here that headings do note the account or the item amounts and what they include. So in this case, we're saying Inc. GST for receivables and payables, because often when you pull up an AR and AP report, they include GST. So having to then backwork the GST is a bit confusing. So these figures tend to be Inc. GST. But if we scroll down, we'll also note that some of these figures are ex GST, because sometimes when you're thinking about your expenditure or your invoicing, you might not be, or generally probably not thinking about the GST component. Then there's the employment expenses, the actual dealing of GST. You'll see our lookup tables, and this lookup table is what allows us to create the detailed set of financials. So if we need to create more line items for financials, so for example, if you want to break cost of sales potentially into more granular detail, you can add items here. And then once you add your item there, they're then selectable within the cash flow summary to then reassign and recreate your financials or your cash flow statement summary. And whatever you've updated in there will be available for selection in your mapping, in the mapping on the right. So remember, in our models, mapping is always on the right. GST is usually right next to it as well. So if we talk through some of the actual sections of calculations, so accounts receivables, accounts payables, like we were saying, they're just generally a dump straight from your accounting package with as much detail as possible. You've got your invoice dates. Now, it's important running invoice dates and terms, and actually you will find this throughout our model where a specific date reference is actually pretty important. So the model will flag if specific date references aren't provided. The reason being, specific date references also allow us to then translate all of these numbers into a daily cash flow, which for some users is actually quite crucial. So, paying credit cards or big Amex bills are often a common one that we deal with. So having that daily reconciliation and daily view of the cash flows is quite crucial. So you see, we have some initial figures in there with some initial terms. Some of the figures land at the start of the model, but if we just jump across, we'll find that these same dated items are also populated throughout the daily time series. So that's why it's crucial for us to have dates available for each line item. So that's on the AR and AP side. But for example, if we go into our amounts and frequency, so it's amounts and the frequency of the amount, your options are, once, so ad hoc item, fortnightly, monthly, quarterly, or annual. So as an example, if we have a client here, or ORC 1101002, or it's client 1, if we have a client there that we do invoicing on a regular basis, so let's say it's 1165, that we bill them monthly, and that starts, and being careful that there is always a differentiation between the accounts receivables and the actual forecast revenue. Now, the forecast revenue should include the terms timing, so you don't want to double up. We do have some versions of this model where there's a separate revenue input, quite relevant if you need to manage things like debtor finance, where the timing of the invoicing is actually quite important. But for this case, it's quite simple. Let's keep it simple for the purpose of this. So, this particular invoice, 2nd of August, due on the 31st. So that's roughly 15, well, that's it, actually outstanding. So let's pop ourselves the 30th of September as the rough timing that we expect. So you'll see that the 30th September item has popped out to the 5th of August, 2nd of November, 30th of November. If we go to our daily rec and we go out to September, we'll find that the 30th of, we need to also map. So we need to map that to revenue cash. So you'll see it here, but because this is a reconciliation of the weeklies, we need to make sure that the cash flows are mapped in the first instance so that they appear properly. And you'll see the daily detail as well down below for every line item. So that's why it's quite crucial having date references for every line item. That's the receipt side. We also have an equivalent or payments side. So we try not to differentiate the actual headers. Feel free to often what we do is we actually allow space. So if you need the spacing to, categorize different things into different blocks, just create yourself some extra space and allow the extra space for you to then rename. So this could be revenue, it could be other revenue, or all sorts of things, but use the space within the block to actually manage your detail. And the same goes with the payment side. So it just helps to sort of block things out into the respective category chunks. And then employment expenses, it's built in a very similar way, and all items have an end week. So by default, they will continue unless an end week has been provided. So that's just something of note. And you'll also find that we manage things like super, so calculating super on top of the payment, again, very Aussie-centric. Super, a payroll, PAYG withholding percentage that we withhold. And also we can schedule super or PAYG and GST. So we can auto schedule based on a profile that we select, as well as a specific payment date within the month that these generally occur. So if you're on a BAS quarter by an agent, or you're on monthly IAS, so forth, that's available for selection. Or if you want to go manual, because sometimes manual is required, just pop your manual adjustments. So turn off the auto scheduling and detail the manual payment amounts. All of that is available. Hopefully this has been a good overview. We'll run some detailed examples in the next video, and looking forward to joining us. Thanks again for watching.